Hi, this is Zach Meir with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 30th of March. And starting off with the S&P, just to limber up, and you can see here that we're still in this bracket or little area between the 200-day moving average and the 50-day moving average. I suppose you could argue that we just closed above the 50-day line, but still within that particular area. 200-day line around 39.30, the 50-day line around 40.20. Looking for a break of the 50-day line to take us back up towards those 40.80 initially, which was the initial March resistance, and then on to 4200. Best case scenario, up to 43.20 by the end of next month, which is the top of a broadening triangle from basically last September. On the downside, below 39.30, risks are rather painful and perhaps rather frustrating retest of the 38.20 zone, but hopefully we're out of that given the way that the RSI is now well above the neutral 50 level, and the momentum seems to be building with an unfilled gap to the upside on yesterday's session. Moving on to Ardelyx, and what a decent move we've seen over the recent past, basically starting in September, a 6-month rally so far, nearly 7 months, so pretty impressive. The question here obviously is how long we think this particular move can last. At the moment, the best call is that we'd hit the top of that August rising trend channel as high as $6, maybe as soon as the end of next month. The upside value while we hold above initial March resistance in the 410, 420 area, so reasonable risk reward even from current levels. The next contender is BridgeBio, which I've covered earlier in the week and seems to be on a decent trajectory. You can see that we've got this U-shaped, what I call a U-shaped bull flag, so we're looking for the shares to at least hit the top of that rising trend channel from back in June, as high as $21, hopefully by the end of next month. And in fact, that's almost the minimum we're looking for given the setup that we have here. So we had that massive gap higher, and unfilled gap to the upside with that U-shaped formation tends to be a very, very strong signal indeed. In fact, if you're a fan of the shares, you'd be looking for a trajectory something like that, so maybe up to $28 over the next 2 to 3 months, that kind of thing. In terms of the stop loss, currently around the $15 mark. That was resistance just before yesterday's push to the upside, and also resistance on the way down from the initial March peak. Different kind of stock now with Carnival, and here the interest is coming from the way that we've got the shares just pushing through the 200-day moving average. That was around $9.50. Above that initial target here up to $10.60 in the 50-day moving average. But the big picture, maybe by the end of May up to $13.50 at the top of that rising trend channel from the end of August. Good risk reward here in that only back below $8.90. And the floor of the channel really blowing out the idea of a potential decent ongoing move or recovery at Carnival. On to Draftkings, which has also been in recovery mode of late. Here you can see that we bounced off the 50-day moving average after the retracement from the $21 zone at the end of last month. That suggests that we're loyal to this rising trend channel from November. Top of the channel there heading up to $25.20. Ideally, we'd see that by the end of May. And ideally as well, there's no further support required or support tests required below the $17 areas, above 17, looking for up to 25 on Draftkings. Another decent riser and mover coming up next, the form of Enovix Corporation. Here, a beautiful break through the 200-day moving average yesterday. That was around $13.30, and above that we're looking for is up to $18 by the end of next month. The added spice is that we've had effectively an island reversal, so gapping down there back in January to flush everybody out, and then gapping higher through the 200-day line, almost as a show of strength in its own right. The view at this point is that while we're above 12, looking for that $18 area by the end of May, and likely, hopefully, to remain above the 200-day line for most of the price action over the near term. On to Intel, which most people have heard of as far as the market's concerned. Here we've got another gap through the 200-day moving average, so quite a flourish there. Technically $30.50 the level there. Above $30.50, looking for up to $34 by the end of April, and hopefully much sooner. This broadening triangle reversal, a very strong one, We had that final bear trap back in February below December support as well. So extra kicker there for the bulls. And obviously the gap higher after a hammer candle on Tuesday, all the more impressive at Intel. Next stock is the beautifully named Lululemon, and here we've had a massive gap to the upside through the, above the 50-day moving average and the 200-day moving average. Is the fact they're both rising now, rising into a golden cross. The $64,000 question now is how far we'll retrace. Bottom of that gap down there was around the $350 mark, so that is notionally the stop loss. While there's no end-of-day close back below that, we are looking for a resistance line projection from the early part of last year, 1-year resistance line projection, as high as $436 over the next 2 to 3 months. But everything here really dependent on how the shares settle, and that is slightly difficult. If you're looking for a momentum signal, then an end-of-day close back above the top of the gap at $370 might be an easier thing to shoot for. On to Micron, which we've covered in recent days, and hasn't disappointed so far. Here we've had an unfilled gap to the upside. We're just retesting or testing the $64 resistance zone from November, above $64 on an end-of-day close basis. We could head up to $72 by the end of May at the top of that rising trend channel from back in August. Stop loss here at the 50-day line, roughly at the $59 level. Personal favorite of mine is the next stock, which not necessarily was of its performance, but the way it's all beautifully poised at the moment. Here we've had a bounce, a bear trap rebound from below the 50-day moving average at around $7.25. Above that, looking for as high as $12 by the end of May. If you're cautious, I suppose you wait for an end-of-day close above the 200-day moving average at $9, but that would give away some of the upside, so probably better to trade it with that 50-day line as the stop loss, only back below $6 and the floor of that rising trend channel from November, really delaying the upside scenario. Decent situation, which has been covered here again, and sort of a repeat appearance, is Oscar Health, and here, top of that channel there from back in October up towards the $6.80 level. End of day close above that gives us a new upgraded target as high as $9, ideally even by the end of next month. But the massive unfilled gap to the upside and closing so well on the gap up day as well, nearly at the top of that range from Tuesday, all the more impressive, and we're also above that old February peak as well. So looking very good there for Oscar Health, especially while we hold above the former resistance around the $6 area and looking for $9. Just a couple of stocks to go now. First one is one which I think I covered yesterday as well, but can't get too much of a good thing. Pyxis Oncology. Here, beautiful candles there after the unfilled gap to the upside earlier in the week. We've got the 50 and 200-day moving average just about a cross in a golden cross, and the strongest part of the cycle tends to be the run up to that sort of cross. $6 the target here, hopefully over the next couple of weeks, and ideally by over the next couple of days. And then after that, we can maybe review the target. But upside value while we hold above the $3.90 level, which was the close on Tuesday. Finishing off with stock which I've also covered recently, Riot Platforms. Here, another unfilled gap to the upside after a couple earlier in the month, so really strong type of price action there. Looking for the top of that broadening triangle from the early part of H1 2022. That's at $13.40, and hopefully we could see that by the end of next month. I think would be a fair time frame, given that we are gapping up now and the 50 and 200-day moving averages are both rising quite well. That's it for me today. More updates tomorrow.